Focus on Ports, brought to you by Transnet National Ports Authority.
Now, legal firm Norton Rose Fulbright has a long history with South Africa's transport systems. The firm acted for mining houses that exported their raw materials. With the ports being so vital to their clients, they developed an interest in the port's capacity to receive and store cargo, as well as direct cargo out. Andrew Robinson, head of transport at Norton Rose Fulbright, South Africa, tells us more.
Andrew Robinson joined the group now known as Norton Rose Fulbright in 1988. He was admitted as an attorney in 1991 after serving in the South African Navy as a flotilla legal officer. He says changes in the country's port systems over the past few years have been positive.
The one really interesting port is that of Saldanha Bay. Now there they decided they would build a dedicated line taking the iron ore from Sishen all the way through to Saldanha. And what they did there was quite clever. They realized that the railway lines generally here are narrow gauge, so they can't take a great deal of tonnage in each truck. So the trucks are fairly small and the trains are fairly small. So they built a wide gauge dedicated railroad from Sishen to Saldanha, and that enabled the mines to move many, many more tons of ore than they ever could on a normal narrow gauge line. So that's an interesting development. Then of course there's the port out at Kucha. Now that's a deep water port which is meant to be able to take the very large container ships. And the idea is that Kucha will receive all of these containers destined for various places within South Africa, either road or rail it out of that port. Alternatively, use smaller vessels to shuttle those containers up and down into the more obvious ports like Cape Town, Port Elizabeth and Durban. So those are the two big changes. And of course there's the big one coming up, which is going to be the dig-out port project. Now, but that's another issue that we're only at the very preliminary stages of that at this stage.
Robinson says the biggest concern at the ports is access. To simplify the term access, does South Africa have the necessary infrastructure to get the goods for export out and bring the goods for import in?
Durban, which is by far our busiest container port, that's become a huge problem. And there are any number of trucking companies, for example, who are frustrated by the delays that they have in either delivering goods into the container terminal or taking cargo out of the container terminal. Now it's important to understand that ships are only come here for a very short period of time, and the longer a ship sits alongside a berth, that's wasted time insofar as the ship is concerned. So it's really important to get the containers on board that ship as quickly as possible. Now if you can't get the containers into the port, into the stacks where they are they wait pending the arrival of the ship, that's a real problem for the shipping lines and for the truckers, because either they miss the stacking dates, which means that their containers with its content don't get exported on that particular ship, or the ship owner suffers losses as he waits for cargo to arrive so that he can load a full ship.
South Africa's ports compare favorably with the rest of Africa's ports. The coastline provides ideal access to the country from the east and the west.
We're not like some of the ports in Mozambique and elsewhere up the east coast that have real difficulties keeping channels open, or the channels often, say into Beira, are there one day, but there's a different channel in a different place the next day because it's a river port. Durban, of course, has to be dredged all the time, but it doesn't suffer the silting problems that other ports suffer. But otherwise our ports are relatively efficient. Some of the issues that they suffered years ago, of course, was theft from the container terminals. They managed to cut down on that through their security quite well. But insofar as productivity is concerned, that still remains a concern. And people constantly complaining about it, so I'm assuming that it's not as good as, say, elsewhere. But it is a bit unfair, I think, to start comparing us to Rotterdam and Singapore, which Singapore, for example, has fully automated container terminals, which is mind-boggling, and you've got to see it to believe it. It does actually work. Nothing does collide. They do all move and get into the right places at the right time. But I think it is unfair to compare us to those container terminals, because we're different. We've got different issues and different structures, and we have to live with them, which I think we do by and large very well.
On the status of Transnet's capital expenditure program, Robinson says that he's not sure there has been much change.
With respect to them, I think it's probably still a bit too early. I don't think the stats have come out yet as, from any of the sort of economist-based shipping people that will show that this has had any real impact yet on the certainly on the efficiency of the ports.
Market demand is increasing and the ports are reeling under the pressure. But even if the finances for expansion are in check, one cannot just go ahead with developments. A major consideration to the expansion of a port is the effect on the surrounding community. Port authorities such as Transnet have started engaging with communities more in order to create a public understanding of how ports operate, their constraints and potential plans.
In the old days, anybody could almost have access to the port. I mean, often as children we would be taken down to ports on a Saturday afternoon, given an ice cream because that was a good time for the parents to relax as we wandered around looking at ships being loaded and passenger liners coming in and out. It was quite an exciting place to go to. But because of the very real security risks that exist in ports, and because of the various internationally applied security measures that are in place, people don't have access to ports. So ports are no longer available to the public just to go in and have a look around. They're probably a good thing, quite frankly, given the way in which harbours now work. And they are really dangerous places, and the prospect of getting run over by a gantry or a forklift are great, believe me. So I don't think the port can work on the public through inviting them into the harbour to see, well, look, this is what we do. Here we are. Come and see what we do. It's exciting and it's interesting work. So they've got to find other ways of engaging with the community.
Well, the African Development Bank released its 2013 African Economic Outlook a few weeks ago. It was bad news for South Africa, which sank to the bottom 10 of the growth chart. But Maersk, one of the biggest shipping companies in the world, says activity remains pretty steady in the market for containers which it both imports and exports from South Africa. CNBC Africa's Thomas Marie visited the Maersk Line South Africa offices in Cape Town, where he caught up with Managing Director Jonathan Horn.
Hello and welcome to CNBC Africa. Joining us now to talk about South Africa's import and export market, Managing Director of Maersk, Jonathan Horn. First of all, Jonathan, thank you so much for the time.
Pleasure, Thomas. Good to be here.
When looking at South Africa, we see that the GDP growth rate was revised downward to 2% this year. Has this been reflected at all in the country's imports and exports coming to and from the country?
Thomas, yeah, look, what drives our business is economic growth. Economic growth, the higher the economic growth, the higher the levels of trade, and our business is obviously directly involved with trade. So a drop in GDP is clearly not a good long-term signal for our business. Yes, it's not great news, seeing the GDP numbers revised down. Year to date, we've seen import and export volumes growing by between 6 and 8%. We had a good start to the year in quarter one with our import volumes, but we've certainly seen those come off a little bit. Exports sort of showed the other trend, where we started off the year slow in quarter one and have seen in quarter two a pickup in exports. So they've both roughly ended up at the half year at about the same sort of number, as I say, between 6 and 8%.
If we look at, we've seen copper and various resources under the market coming under strain, the indexes losing out over the couple of days. Have we seen this being reflected in South Africa's exports in raw materials leaving the country?
When we look at our export numbers, we've seen a lift in our export numbers, certainly in quarter two, and a lot of that was around, for example, chrome, manganese, scrap metal exports. A lot of that is driven by consumption in China in particular, and as there are reports coming out that growth rates in China are also coming off slightly. I think the latest numbers are 7% or just below 7% GDP growth. That still is a lot of growth in a very big economy, but if that growth comes down, that will certainly have an impact on our commodity exports in particular.
We see that the Department of Trade and Industry have launched the National Exporter Development Program to advance the country's exports to international markets. What does Maersk believe are the greatest barriers to South Africa's import and export market going forward?
I think if we go back a year to 18 months when our exchange rate was particularly strong, I think that was to some extent a barrier. But with the rand dollar behaving like it has certainly over the last year, I think the opportunity is there. I heard Minister Davies on the radio last night talking about the opportunity for exporters given the state of the rand right now. So yeah, look, that is no longer a real barrier. I guess the question is the volatility around the rand dollar and how long it will stay at that level for. But certainly there is an opportunity. I think it's what the country needs is more and more manufacturing industries or businesses that add value to base materials. We desperately need jobs in this country, and any growth in that will be, I guess, most welcome to South Africa as a country.
Looking beyond South Africa, we see that Maersk is planning on expanding its operations across the continent. What do you believe that governments and policymakers should be doing to boost international trade in their countries?
Yeah, to grow economies, I guess one's got to make sure that trade into and out of countries, is easy, so that the infrastructure is there in particular. To make easy trade, a reality. Institutional stability is another issue. Predictability, I guess, is what investors are wanting in terms of investing on the ground in countries and bringing their money to invest in facilities in the countries. But if we look at it from our point of view, it's really around infrastructure, making sure the infrastructure is there, making sure the infrastructure is efficient, so importers and exporters can get their goods into and out of the countries quickly and at the best cost. We mustn't underestimate the fact that we are competing against other major economies of the world who are also trying to attract people to come and invest in their countries and continent.
We're going to leave it there. Jonathan Horn, thank you so much for taking the time to speak with us.
Thank you, Thomas.